What is worldwide income for non-resident aliens? Imagine earning money from all over the world. Now, think about how the United States taxes that income. For non-resident aliens, the rules are quite different from U.S. citizens or resident aliens. When you hear about worldwide income, it means all the income you earn from every country. But for non-resident aliens, this isn't how it works. They are only taxed on income they make from U.S. sources. So, if you are a non-resident alien living outside the United States and working in another country, your income from that country isn't taxed by the U.S. government. It's only the money you earn from U.S. jobs, investments, or business activities that counts. This is a big difference from resident aliens or U.S. citizens, who must report and pay taxes on income from all countries. To be clear, a non-resident alien is someone who is not a U.S. citizen and doesn't meet the rules to be considered a resident alien for tax purposes. You become a resident alien if you pass the green card test or the substantial presence test. The green card test means you have a permanent resident card. The substantial presence test looks at how many days you are physically in the U.S. over a 3-year period. If you are in the U.S. for at least 31 days this year and a total of 183 days over the last 3 years, including this year, you might be considered a resident alien. When it comes to income, non-resident aliens only pay taxes on 2 types of U.S. source income. The first is effectively connected income. This is income from a U.S. trade or business. If you work in the U.S. or run a business here, that income is taxed at graduated rates, similar to what U.S. citizens pay. You can also deduct business expenses related to this income. The second type is fixed, determinable, annual, or periodical income. This includes things like dividends, interest, or rent that come from U.S. sources but are not connected to a trade or business. This income is taxed at a flat rate of 30% unless a tax treaty between the U.S. and your home country reduces that rate. No deductions are allowed against this type of income. For Latino families with members who are non-resident aliens, understanding these rules helps in planning and avoiding surprises. If a family member is a non-resident alien, they should focus on reporting only their U.S. source income. It's also smart to check if there is a tax treaty that might lower their tax rate on certain income. If a non-resident alien spouse is married to a U.S. resident or citizen, they might choose to file jointly as residents, but that decision needs careful thought because it can change how much tax they owe. In summary, non-resident aliens do not report or pay taxes on income earned outside the United States. They only pay taxes on income from U.S. sources. Knowing this helps families manage their taxes better and stay compliant with U.S. laws. It's always a good idea to consult with a tax professional if you're unsure about your specific situation.